On the Spot with Michelle Makori is brought to you by Prime XBT.
Hello, I'm Michelle Makori. Thank you for joining us. And joining me today is Will Rhind, CEO and founder of GraniteShares, one of the fastest growing ETF issuers in the world, with over $1.6 billion in assets under management. Will has managed ETFs for over 2 decades and has held senior positions at iShares, the World Gold Council, and ETF Securities. Will, welcome back to Kitco.
Thank you, Michelle. Great to be back on the show. Really nice to see you.
Great to have you with us. And Will, we are going to get your outlook on everything from the macroeconomy to precious metals to microprocessors. But let's start off with precious metals that we haven't focused on as much lately, and that is platinum. The platinum price down about 15% year to date, largely due to concerns about economic downturn and slower growth in China. But you are saying that the market may be underestimating the value of platinum compared to the demand and supply expectations. So let's break that down. And why don't we start off with the demand angle? Where are you expecting to see platinum demand coming from?
Well, the demand, Michelle, is coming primarily from where it always has come from, which is the auto industry. So the auto industry is still in a very healthy shape. We expect, vehicle sales to be stronger this year than they were last year. And we're still in that sort of backlog situation where if you go and buy a new car from dealer, typically you're seeing premiums still over MSRP at the dealer. And that in part is still due to some inventory and supply chain constraints that have to be yet worked through. But all that being said, platinum is used as a catalytic converter in the devices that clean emissions on vehicles. And so vehicle sales are robust. Demand for platinum is robust. It's really the supply side which is causing the issue. And, the forecasting this year, the platinum market for almost a record deficit, about 1 million ounces in deficit, meaning we have way more demand than we have supply. Throw into that concerns about the power distribution in South Africa, where the majority of platinum comes from, big blackouts from the electricity grid, and that's throwing more supply into doubt as well.
Right. Well, you may not know this. I grew up in South Africa. I was recently in South Africa. I visit there quite regularly, and I can personally attest to how severe the power shortages are. There's regularly scheduled load shedding, as it's called, where every household, every business, regardless of which area you're in, is told to expect a power outage for a certain period of time every single week. There's, in fact, an app that tells you, hey, you will not have power from this time to that time in this particular area. And that's best case scenario when it sticks to that schedule of load shedding, as it's called. So I see that that is going to be a big supply issue for platinum. But let's focus a little bit more on the demand side, because you mentioned platinum in regular vehicles, and there's increased substitution of palladium with platinum in gasoline after treatment systems, also expected to contribute to the growth in platinum auto demand. But what is platinum's role in hydrogen fueled energy and hydrogen vehicles? Because that's a big area of growth, isn't it?
Yeah, no, absolutely. And, in the rush for, new green technologies, and certainly from power sources, it's not just going to be a story about batteries, but we believe that hydrogen fuel cells are going to be a big part of that conversation as well. And there, platinum is used in a similar way to the way that it's used within vehicles, and it is a catalyst metal. So it's used in the catalyst that ultimately converts that hydrogen into electricity. And so we think that that's a big growth area. We're seeing, a huge amount, if you look at in the US, industrial policy that is being put into place in terms of specifically Inflation Reduction Act around the amount of capital that's going to be spent on hydrogen technologies is significant and a big growth area for the future.
Yeah, absolutely. So demand coming from the hydrogen sector. Are most of the supply constraints really focused on South Africa and the power issues we discussed there?
That's right, because the second element to that, in terms of second largest supplier or producer of platinum, is Russia. And as we all know, Russia has its own issues with regards to not just production, but in terms of the sanctions and everything surrounding the Russia-Ukraine war. Another point you made, Michelle, which is really important to get across, is that it's not just a straightforward demand platinum story from the auto industry itself. It's also a substitution story, meaning that automakers are choosing to substitute platinum, which is a lower priced metal per ounce than palladium, than what they've traditionally used, which is probably more palladium in industry. So we're seeing the effect of that platinum being used from the substitute. I think the substitute is not just about price, but it's clearly a moral issue as well, with automakers looking to try and get Russia out of their supply chain.
How much growing demand do you expect to come from this growing hydrogen sector? Hydrogen as a clean source of energy?
And that is probably the big question, Michelle, is really how to put a number on that. At the moment, it's still pretty small because that's still a nascent industry. But I think we have to be optimistic that could be a significant source of demand in the future. There's no reason to believe that hydrogen will not be in the mix in terms of alternative fuel sources, and therefore, as long as platinum stays relevant as a catalyst, we think that demand could be significant.
Yeah, and that brings into question whether it's a long-term play with regards to it being used in hydrogen-fueled energy, because I understand that there's currently research being done to use non-precious metals like nickel in that capacity. Cornell and the University of Wisconsin have published research showing that non-precious metals like nickel can be used effectively both for the cathode and anode electrodes of the fuel cell. Still need to work out some challenges and issues there. Now, I'm clearly not a chemical engineer by any means, so I'm not going to get into the details there. But is this role of platinum in the hydrogen energy sector only relevant as long as there isn't a cheaper substitute on the horizon?
That's 100% correct. And there's no different to the catalytic converters, Michelle, whereby, it's the job of the chemists, frankly, to try and work out what the optimal mix is going to be. And there's a couple of factors at work, because clearly on the one hand, you want to try and use as little of the precious metal as you can because of its value, the high cost. You're always trying to optimize the cost. But at the same time, you have to meet emission standards. And so there's only so much you can do in terms of optimizing before it fails those emission standards. And the reason why we still have platinum, we still have palladium today, is because we haven't been able to get those out of the catalytic converter. In other words, find something better or something cheaper that not only allows the efficiency of that particular process, but allows it to meet those environmental standards. And it will be no different for hydrogen. As of right now, that is exactly what everybody's trying to work out, is how to make the best possible, catalyst for the fuel cell. Platinum works the best at the moment. Mm-hmm. It may or may not be the case in 20 years' time from now, but that is the story at the moment.
All right, so given these supply and demand factors that we just discussed, what is your outlook for the platinum price? I believe it's currently testing supported around the 905 level. What's your outlook then?
Yeah, so I think the platinum price, if any metal right now, I think you could say is undervalued in this market, I think it's platinum. And we're testing now the March lows. I mean, platinum has been trading in quite a volatile range this year. Had a big burst into the first few months of this year, pulled all the way back in March, went up again, and now has pulled back again. So I think at this particular juncture, economic picture, certainly for the US, looks pretty robust, and that is a supporting factor. The vehicle demand story we mentioned is a supporting factor. The X factor that's dragging platinum down a little bit at the moment is what's going on in China. And as we know, the Chinese economy has been stuttering this year. And really, the big question on everybody's asking is, when are they going to stimulate, or if they're going to stimulate? But I think we're now reaching a consensus. It's more, when are they going to stimulate? And clearly, given that market is so important for demand for all commodities and more broadly, as soon as we get some sign that that's happening, I think that will provide a support for platinum.
Well, correct me if I'm wrong. Hasn't the People's Bank of China been cutting rates, going in the opposite direction to most central banks?
Exactly. So that's exactly what they're trying to do. They're trying to support the property market, trying to get some more stimulus into the economy. I think that the issue is we haven't seen the effects, the fruits, if we will, of that just yet.
Right.
But that's exactly what they're trying to do.
All right. So given all of this, what is your price outlook for platinum for the end of 2023?
I think for platinum, we're looking at a price level higher than where we are today. I don't think it's sort of materially higher, but I think somewhere, could we get back to a couple of $100 higher than where we are today? I think so. If China starts to kick in, we continue to get the robust sort of economic data coming out of the US. I think we could see that by the end of the year.
So it's contingent then on the US economy showing signs of resilience as well?
Well, yeah, that's the part of the story. Clearly, we've got the US and China are the two major factors here, I think, that are driving demand and the macro picture as well.
Okay. And you said to me earlier that overall, macro-wise, you're calling for not a soft landing or no landing, as you put it, that we may be able to avoid a recession altogether here in the US. Expand on that.
I think certainly for this year. I don't see that for this year. I know that's probably not the consensus view. I know that everybody seems to be calling for an imminent recession and has been since the beginning of this year, not just as a recession, but in some cases an outright crash or hard landing. I just don't see that at the moment. The data, specifically data coming out yesterday, I mean, even most surprising, even to me, was robust data from new home sales starting to pick up. And so I don't see where that catalyst is coming from right now. I think if we want to talk about recession, we have to talk about what the Fed does from now, and clearly, whether they over-egg the pudding, so to speak.
Right. And Powell is signaling at least 2 rate hikes, but we'll circle back to the Fed and the macro. I still want to get more of a sense of where you see this platinum play going, because you have a pretty bullish outlook on it over the next 5 years, don't you?
Yeah, I mean, it's just a metal that we like. We have always liked. It's a metal that, has been trading in a range really now for the last few years. And there are some good reasons for that. But we think that, finally, with the market in deficit, the electricity problems in South Africa and the demand picture remaining robust, that if there's ever a chance for platinum now to go on a bit of a run, it's now.
But how much of a run are you anticipating in a mid-term sort of time range?
Well, like I said, I mean, a couple of $100, above where we are today by the end of the year, I don't think is unrealistic.
Okay.
But, this is a market where, like I said, there's variables in terms of what happens in China as well as the US.
Right. Always variables, Will. Let's focus a little bit on silver, because silver is also expected to benefit from the whole decarbonization agenda with industrial use, as well as being as a hedge against inflation and a store of value. But silver is down, around 5% year to date. What's your outlook on silver for the year?
Silver is a little bit more troubled, if that's the right word, because it really has to decouple from gold, I think, in order to go on a run here. And that's tough. Silver is just so correlated to the gold price. And typically, when the gold price does well, the silver price does well also, and vice versa. So we're in a market where, the gold price is softening a little bit. So is silver, so are the other metals. And I think silver has hung in there quite nicely. But while the gold price is softening, it's difficult to find too many bullish things to say about silver.
Okay, so you're not particularly bullish on silver at the moment.
Not at the moment, no.
All right, but similar supply-demand issues, if not more dramatic supply-demand issues forecast for silver, at least to some recent reports, because, well, whether one agrees with it or not, There's obviously this very ambitious push by governments around the world to become carbon neutral over the next decade, phasing out vehicles with internal combustion engines that use diesel or gas. We know that here in the US in 2021, President Biden signed an executive order which mandates that all new vehicles sold after 2035 be electric and carbon neutral. The European Union has agreed to ban new internal combustion engine vehicle sales by 2035. So a big push to decarbonize on the vehicle front, also for solar energy at large, and silver is seen as critical to that. And according to some reports, silver is set to face a serious supply shortage. I'm citing a report by precious metals analyst 𝗍𝗵𝗧, and this report was published by Goldfix and Zero Hedge, saying that the world is in fact running out of silver, and it suggests that Mexico, the world's largest silver producer, is expected to run out of silver in 6 years. China, one of the world's largest silver producers and consumers, is already facing a supply gap of 3,000 tons. And China, as we know, is one of the world's largest markets for electric cars, one of the biggest electric vehicle producers and biggest solar panel producers. And the report here says, Will, that China stands among the top 5 silver consumers globally, with an average annual demand of 6,300 tons over the past decade. The US Geological Survey data from 2011 to 2020 reveals that China's yearly silver mineral production barely reaches 33,050 tons, leaving a significant, 3,350 tons leaving a significant supply gap of approximately 3,000 tons to be filled through imports. And this report goes on to say that if current mining rates of silver mining remain, by 2032, China's underground silver deposits will be fully depleted by 2032, leading to resource extinction. What do you make of that report, Will?
Well, I mean, first time I've heard it, so I don't know. I'd have to look into it in a bit more detail, but clearly, I think from my perspective, there's always been concerns about the lack of supply in all of these precious metals, and silver's no different. So far, the counterbalance to the lack of supply arguments is that we've gotten very good at recycling, and so typically, when the prices go higher, you do get more metal coming on the market in the form of recycling. And that obviously acts as a counterbalance to particular resources. So yes, one of my overall super macro thesis for why I think we are in a super cycle for commodities is that we just have not invested the capex over the last 10 to 15 years in bringing more production online. And silver is no different to any of these other commodities, whether we're talking about copper, et cetera. We haven't invested in the production. And if we're really serious about decarbonization, like you said, we're really serious about sustainable technologies, using silver, using copper, using platinum in these new technologies, we're going to need more of that. And that will put pressure on supplies. And obviously, in 2030 or 2035, it's difficult to say exactly where we'll be, but you can be sure that we're going to need more supplies of these metals, and that's going to be the issue as to how do we get them.
And why do you think this general sentiment hasn't kicked into the market yet? I mean, we've had so many guests come on the show and say triple-digit silver, and these are the reasons very similar to the ones you've just highlighted. Why is this mentality not catching up with the current price of silver?
Because we're not there yet. And this has been something that has happened in silver. I mean, it's happened in other metals as well, other commodities, but particularly in silver. There has been this narrative every now and again that we're running out of silver or there's an imminent supply crunch, and it hasn't really happened. We had that burst in silver prices up to $50 a few years ago, and that got everybody excited, but the price flattened, quickly after that back down to the sort of $15 to $20 range. And I think we really need to see some momentum in the price again to get people excited about silver. A lot of people obviously want to see silver back up to those levels, but it just hasn't gone there. And I think to get people excited about silver again, we're going to have to see those higher prices, and we just haven't seen that yet.
Want to get your thoughts on something else that was in this Zero Hedge report, and it was referencing a point made by Goldfix, citing Mexico, which is the world's leading silver producer, saying that Mexico is in the process of soft nationalization of its remaining silver, and that the BRICS nations, Mexico is not one of those nations, but that the BRICS nations are increasingly restricting G7 access to their remaining resources of silver. Do you see that as a trend, that the BRICS nations start to freeze out G7 as they move ahead with this potential de-dollarization agenda, which involves reportedly a global reserve currency backed by commodities, potentially including gold, potentially including silver, oil, rare earths? Do you see a move to sort of isolate the G7 from having access to these kind of commodities?
Not right now. And it's hard to see a situation where that happens unless, like you said, we're talking about companies becoming nationalized or under state control and therefore being subject to a state agenda. It's difficult to see, obviously, with a company that's trading in a free market, why they wouldn't sell their metal on the open market to the highest bidder. But I think that you'd have to be talking about some kind of state-driven policy in order to affect that, which is 100% the narrative behind de-dollarization. That is a real thing. That very much is something that we expect to see more of. But as it relates to natural resources, we haven't seen that just yet.
Okay, so let's expand on the de-dollarization agenda with regards to gold. Are you seeing gold play a role as perhaps a substitute in terms of a reserve asset if the de-dollarization trend accelerates? We do know that central banks have been buying gold at record rates over the last year or so. How do you see gold fitting into the de-dollarization agenda?
I think gold is there. That's the number one thing to talk about when we talk about de-dollarization. Central banks buying gold has been a trend going on now for the last decade plus. Central banks have been increasing their exposure to gold. Why have they been doing that? Well, they've been doing that because the central banks that we're talking about, they're not G7, central banks. Typically, they're emerging central banks, Chinese, etc. That all have one thing typically in common, and they have large reserves of US dollars, so large foreign currency reserves of US dollars. They're trying to diversify those reserves just like you or I would diversify our portfolios, and using gold as one of the main tools to do that. So absolutely, this has been a big trend over the last 10 years. I think this will continue to be a big trend. And what these central banks are doing is selling dollars that they're accumulating in foreign exchange reserves and replacing those with gold.
Okay, so want to get your outlook on the price of gold then. We've had prices retreat from the highs we saw in May, saw gold break above 2,000 there. As we touched on, we have a very aggressive Fed Chair Powell strongly signaling 2 more rate hikes. Do you see gold making a real all-time high in 2023?
I think it's difficult to see that in 2023 without a recession, or certainly without a hard landing in place or any kind of dislocation from the monetary policy. Difficult to see that at the moment. I think the weakness that we've seen just certainly over the last few days, but now gold settling at a 3 or 4 month low is as a result of that skepticism around the ability for gold to make a high on the back of data that seems to be kind of reaffirming a more positive story around the economy, a positive story at the moment on the dollar, and therefore more robust rate environment.
Okay, so Will, we know that gold did hit a new all-time high in May based on the COMEX gold futures price hitting a new record high of around 2,085. But you don't think gold is going to make a real all-time high in 2023, just to summarize your point there?
I don't think so. It's difficult to see. Again, I can't predict a shock like we had over the weekend in terms of the Wagner private military company, attempted mutiny, attempted coup in Russia. Absent something like that, I don't see gold making an all-time high this year. I think the time for gold to shine is we have to wait to see what monetary policy, what the Fed does in the next 6 months. I think already rates have gone too high. It's my view. And I think tightening even more is just increasing that probability of there being some kind of dramatic fallout. We've already had banks failing. The regional banking crisis is absolutely not over, but ratcheting rates up further from here only increases the probability of there being a severe recession or a crash at some point down the road.
Okay, so more optimistic about gold in 2024, less optimistic about the US economy in 2024 then?
I think that's a good way to summarize it, that, at the moment, I think things are pretty good. But if we continue to raise rates and tighten financial conditions, we continue to push up mortgage rates. We know commercial real estate is already having a torrid time, but to tighten the screws further here only increases the chance of more trouble ahead.
All right. So, Will, for viewers that aren't that familiar with the reasons to own gold, you mentioned geopolitical risk, that almost rebellion, still very unclear what the details were with regards to the Wagner Group and Putin there. But there was a small little move in gold during that semi-crisis unfolding. Gold hasn't really moved much on geopolitical risks so far this year, even though one could argue that there's still so much uncertainty on the global front, not just with Russia and Ukraine, but possibly China and Taiwan, the Middle East, certainly a lot of geopolitical uncertainty. We also have this idea of inflation. Gold is typically an inflation hedge. We've also have the idea that gold is a store of value and should be purchased as a form to protect against currency debasement and devaluation. What are the top reasons in this environment that you think people should have in order to justify or substantiate having exposure to gold?
I think you've mentioned all of the main ones or all the big ones, with the exception of one, which is as a hedge against an upcoming crisis, an upcoming crash, stock market dislocation. And I think the higher the equity market goes, a lot of people think that the equity market is already overvalued, the more that it's prudent perhaps to add gold into the portfolio so that if we do get a correction, people have some exposure to something that's uncorrelated. That is really the missing piece. Everything else you've mentioned, they're all very valid reasons to own gold. And I think over the long term, I think the dollar will weaken with the amount of debt out there, with the economics backdrop that we have. However, the short term, I think, is people buying gold as a hedge. That is the reason that people have always bought gold. Indeed, you touched upon the brief all-time high, earlier this year, if you want to look at that from a technical perspective. But you can argue that a large part of that was driven by, speculation over the debt ceiling and the possibility of the debt ceiling not happening or not being raised, I should say, and therefore the US plunging into another sovereign credit downgrade or, dare I say, some kind of default. So that is really the fear factor that drives gold ultimately, and that is the reason why I certainly think that everybody should have a bit of gold as a permanent piece of real estate in the portfolio.
Now, in terms of a bit of gold, traditionally the recommended allocation is 5%. Do you think in this environment it should be higher than that?
That's always, it's such a subjective number. I always say enough to be meaningful. In other words, you hear about people saying 1%. Well, mathematically, 1% isn't going to do anything for your portfolio unless you're talking about the price going up by hundreds of percent, which is highly unlikely. So I always talk about enough to be meaningful, enough for it to do something for your portfolio. That could be 5%, it could be higher, but in that 5 to 10% range, I think would be perfectly rational.
And I know you, GraniteShares, have the bar ETF. Is that the way that you think investors should have exposure to gold, or should it be physical gold, or should it be gold miners, or should it be a combination of gold-linked products?
That's probably a show in itself. But my view, just quickly, is that if you want to own gold in the portfolio, physical gold, the gold ETF that we offer, 𝗲𝗺, is a perfectly logical way to do that. I mean, that's really what it's designed for. Gold ETFs backed by physical gold in a vault. It just tracks the price of gold, the spot price of gold. And that really is its purpose. It's designed for you to hold gold in an investment portfolio. If you want to own physical gold in your home, coins, bars, etc., that's what they're designed for, to own it physically. So there is a difference. And of course, gold miners, you mentioned also, that's speculating on a company that is involved in either the production of gold, whether it's a large cap company, a small cap company, and clearly the future or the prospects for that company. But if you want to own gold in a portfolio, gold ETF, in my view, is absolutely the way to go. And 𝗲𝗺 or 𝗲𝗺 is certainly one way to do it.
Now, just so our viewers are clear, are they able to redeem those gold bars at some point if they buy the 𝗲𝗺 ETF?
Not really. It's not designed for that. And the reason is simple, that we traffic in 400-ounce bars. So a 400-ounce bar of gold, obviously multiplied by the gold price at the current levels, let's, for argument's sake, say it's around $800,000 a bar. So it's institutional grade LBMA, or London Bullion Market Association good delivery gold. And therefore, typically it's the size of those bars that really precludes them from being, for us being able to offer them on a sort of home delivery basis.
Yeah, that's quite a bit of gold to deliver there. All right, well, you did say that one of the big factors that should be motivating people to hold gold right now is to not be correlated to the market. Is that to say that you do expect a big market correction? And by market, I mean equities, and specifically the S&P 500, for example, here in the US. What's your outlook there?
No, what I mean by that is, there are really two broad reasons why people own commodities. And we can get into the nuances of it, but broadly speaking, it's because they're uncorrelated to stock and bonds, which means that they move in a different direction, and therefore they benefit risk reduction in the portfolio. That's the technical explanation. The other explanation is that, typically these assets have preserved their value over time or act as a hedge against inflation. So when I say it's uncorrelated, what I mean is that the reason why a lot of people own gold is not because they think the price of gold is necessarily going to go up hundreds of times, or in other words, it's not a speculative asset, it's a defensive asset, and they're holding it because if the value of their equity portfolio drops, they want something that will maintain its value, and that is the role that gold plays in a lot of portfolios.
Right, but I guess where I was going with that question is to get a more specific outlook from you on the US equity markets. What are you expecting there?
Well, as I said, Michelle, I think that my outlook for the US equity market this year is pretty positive. Earnings have been robust, and at the end of the day, the stock market is really a function of the forward earnings from companies. And so far, there's been good. You can argue that certain companies, have benefited from multiple expansion in the first 6 months, playing a bit of catch up perhaps to the sell-off that we saw last year. The next 6 months, has to be more about the fundamentals. But so far, the earnings have come in strong. So there's no reason for me to believe that we're going to see a big correction in the market this year.
And next year, if the Fed is put in a position that it needs to start pivoting or cutting, what does that mean for equity markets?
If they start cutting, that's almost certainly good news for markets, as we've seen before. I think it's the period before they start cutting, or the period that leads to the cutting, which is the bit to worry about, which is, do they over tighten and push the economy into a hard landing? That's the bit we just don't know. We have to wait and see what he does from now until the end of the year.
But you're pretty confident that the markets are going to end the year in the green at this point?
US equity markets, yes. I think to be up where we are. I mean, people were talking about at the beginning of the year, those that weren't, calling for an imminent collapse were saying the next, the latter 6 months of the year are going to be great. First 6 months are going to be a bit of a struggle. We've at the moment had the opposite. We've had a great first 6 months, and now it's a question of what are the last 6 months going to be. Again, no reason for me to believe that we're going to end the year on a down note.
Do you think that there's significant upside left in the last 6 months?
I mean, for the broad market, I'm not sure of significant upside. Again, it's going to be down to the earnings and what we see coming in the next 6 months. For some of the stocks that have really raced away with it, can they deliver more? Yes, there's every possibility that some of these large tech companies continue to deliver strong fundamentals. They've been laying off people. They've been rationalizing the businesses in many sectors, so margins have been improving. But like I said, the broad market, no reason for me to be really negative here.
All right. Well, you mentioned some of the big tech stocks that have pulled up the market significantly, and that's a very good segue to get your thoughts on Nvidia, because I believe you've recently launched a few investment vehicles focused specifically on Nvidia. Tell us about that.
Yeah, so we have in our stable of products, we offer all sorts of different investment strategies, as you said right at the beginning in your introduction. But one of the more interesting things that we do is we offer leveraged single stock ETFs. So as the name sounds, it's leveraged, prepackaged leverage within an ETF. So in the case of Nvidia, it's 1.5 times the daily price of Nvidia. So the ticker is NVDL. And so for those that are looking for a high conviction view on Nvidia, you can buy the NVDL ETF. And there are clearly others that are linked to companies such as Meta, to Tesla, other tech stocks in the sector. But particularly for Nvidia, this is probably the best performing or one of the best performing ETFs in the market this year. As I'm sure a lot of your viewers will know, there's been an AI frenzy. Anything linked to AI has done incredibly well this year. And Nvidia really has become the AI stock in the market. So naturally, a leveraged Nvidia play has done incredibly well.
Right. The question is, can it continue to do well? Well, the stock is up, I believe, around 187% year to date, as you just mentioned, largely due to that very bullish sentiment regarding AI, artificial intelligence. But there are concerns that this could change if the US goes ahead with a potential ban of exports of AI chips to China, because there's concern that it would be facilitating China's advancement in artificial intelligence. And some worry that this would hurt Nvidia and other artificial intelligence companies and other microprocessor companies. What's your outlook on this?
That hasn't changed my outlook. I mean, I think there are these risks, and that was the news today regarding Nvidia. But if you look at every single analyst in the market that covers Nvidia, the median price target is, I think, $100 or so higher than where we are today. Indeed, at the high end, you have targets of around $600, I believe, by year end. So the market is 100% bullish on AI, bullish on Nvidia, I think, for the rest of the year.
So you would feel safe saying that there's still quite a bit of upside left in getting into Nvidia at this point?
Well, that depends.
And quite a bit is relative. I get that, but
yeah, I mean, it depends on, again, your view on AI.
Well, what is your view?
Well, I think AI is going to be one of the most transformational technologies that we've ever seen. I mean, if anybody's used ChatGPT, just as one particular example, you'll have at least an understanding of what I'm talking about. But I think it's something that it just is going to be transformative, and every company will have to have some AI strategy, just in the same way that every company a few years ago had to have some technology strategy. So absolutely, it's going to be transformative. Somebody like Nvidia is going to be leading the way. It's not to say that is going to be the case forever, but I think if you like the AI story, then that is the company at the moment that really personifies that story.
All right. So, Will, two questions as we wrap up here. In terms of the precious metals, which one do you think has the highest chance of significant upside this year? Safe to assume from what you said, it's platinum?
For me, it's platinum. Again, I just think the fundamentals are there. I think like I said, the supply story, it's the best it's been for many, many years. The demand story is there with the auto. We talked about the strength of the US economy. Again, I don't think that's going to change coming to the end of the year. I visited a dealership myself just in the last couple of days, and every car they were trying to sell me was over the sticker price. And so I just don't see that slowing down until there's some kind of recession, which is good news for platinum. Platinum price has not done great over the last few years. I think it has been looking for, for a catalyst to move higher. And I think if there's ever going to get one, it's now.
Did you buy the car?
No, I didn't.
You didn't buy
I'm
the
not going
car?
to pay over. I'm not going to pay over sticker. That's my Scottish roots coming out. But
all right, those car salesmen, you know what they say about them. Just kidding there. Will, what would you say then is your strongest point of conviction regarding the markets right now? Strongest position of conviction?
Well, I think, again, my view, I think, is absolutely not a consensus view, which is I think that the market is in good shape and, we'll end the year positive. But like I said, that's not necessarily a high conviction view in the true sense. But coming into this year, I can tell you that I've almost never seen a market or an outlook so bearish than coming into this year. And that has not been correct.
Okay. Well, thank you so much for giving us your thoughts and insight, Will Rhind. Really appreciate it. Thank you.
Thank you, Michelle. Absolute pleasure.
All right. And as always, thank you all for watching. A big thank you to our sponsors, Prime XBT. And as a reminder, there is a special offer for Kitco viewers in the description of this video. So make sure to check that out and make sure to check out our next video. Until then, from me, Michelle Makori, and the rest of the team, it's goodbye.
Begin your path to financial freedom. Gain up to a $7,000 bonus on us. Register and use promo code. Deposit and enjoy a 7% bonus. Available now. Link in the description.